Chapter 4, Balancing Accounts. Balancing an account is the process of finding out which side of the ledger account is greater. Now, this can result in a debit balance or a credit balance. Now, debit balance is the amount by which the debit side of an account is greater than the credit side, by which that represents difference between the total of debit and credit side. Now, credit balance. Balance is the amount by which the credit side of an account is greater than the debit side. Again, it is the difference between the total of the debit and credit side. And here the credit side will be higher and here the debit side will be higher. Now an important thing. Why do accounts need to be balanced? Now this we'll see in two forms, that is the cash book and ledger accounts. Now cash book should be balanced periodically to determine how much money is left in the bank account or how much cash the business has left. The amount of money present at the end of the day in the bank. Now your periodically is weekly. This is because cash book, obviously it is an important account. Now ledger accounts is balanced to determine how much the business owes other people, how much it is owed, and how much it has been received from or spent on various activities. Now these are the various ledger accounts that we have studied in the previous chapters, including customer accounts, supplier accounts, etc. Now the ledger accounts, this can be balanced monthly or even yearly. But if it is a customer's account or a supplier's account, then we balance it monthly. Now the second part is how to balance an account. The various steps for this is very basic and straightforward. So let's start. The first step is to add each side of the account to find which has the lesser total. This is one of the keywords, the lesser total. And each side of account is nothing but the debit side and the credit side. Second, insert on that side the amount needed to make both the sides equal. On which side? This is the one where the total is less. Third, insert the total on each side of the account and carry the balance down to the other side. Keyword number 1 of the account and keyword number 2 on the next day. In case in a hurry, if you don't write the next day in the date column, then your marks can be reduced. So make sure that if the account is closing on 30th March, then the next day will be 31st March, and so on. Now a note. You should always indicate as balance carried down or balance brought down. Now here are three representations for the balancing figures. First, balance brought down or carried down. This is the right way. The second is balance brought down or balance carried down with balance in short. This is also acceptable, but the first one is preferred. Third, just writing brought down or carried down in short. This is not at all acceptable. So therefore make sure that even if you are in a hurry, you at least go for the second presentation. And the first one is the best. Now let's see the recording in some various situations. So now let's assume that there are already some transactions recorded. Okay, and now find the total of the debit side and of the credit side. Now if the debit side total comes to 800 and if the credit side total comes to 500, then what you have to do is write on both the sides the amount which is greater, that is 800, and then the difference amount, that will be the 300, 800 minus 500, as balance carried down. Now this will be the date on which the books are closed. After this, what you have to do is bring this balance of 300 down on the opposite side. Therefore, 300 and balance brought down, and this will be the next date. Okay. So now one thing that you need to note is that if this balance of 300, that is the balance brought down, is on the debit side, then it represents a debit balance. And in case if this was a bank account, then it would represent that a good amount of money is there in the bank. Now, for instance, if this 300, that is the balancing figure, would have been on the opposite side, that is on the credit side, so it would have been balance carried down over your 300 like this, balance brought down, the date and the date. This case will be when the credit side total is more than the debit side total. Now let's see what this represents. This represents a credit balance in the account, and if it would have been a bank account, then it would show that the business owes money to the bank. That means the business has to pay money to the bank. It is on credit. Now let's see the other situation, which is balancing an account with only one entry on each side. So what this means is that the entry has been made on the debit side, some amount, and on the credit side, some amount. Is suppose $500, and on the credit side also some entry and $500. Now if you see, the amount is equal on both the sides, therefore 500 and 500. Now in this case, as there is only one entry on each side and they are equal, so there will be no balance to carry down. So in this case, there will be no balancing figure as such. Now the other situation is balancing an account with an entry on one side only. Now for this, let's take an example. Suppose X is a supplier to a business and we are making X's account. So therefore, here the date and then purchases, amount being suppose $500 only. And now there's no further entry in the business happening with X. And so while closing the books, as there is no entry, this 500 will come down. Then on the debit side, and then over here 500. This will be your balance carried down on the closing date. And note, it would have been opposite if there would have been only one entry in the debit side and then balance carried down on the credit side. Now obviously if the balance has been carried down, then we will have to bring it down. So then this balance carried down of 500 will come down on the opposite side of the account. 500 as balance brought down, and this will be the next date, right? Now the last part, that is balancing the 3-column cash book. Now here you have 3 columns. Now one important thing to note is that the discount columns are not supposed to be balanced, and the totals of them are carried to the discount allowed and discount received accounts respectively. Now that means discount account column will not be balanced. For instance, if the debit side discount account totals 300 and the credit side discount totals 200, then the balancing of 100 will not be done, and we will just write this 300 over here and 200 over here. And apart from this, the cash column and the bank column, this will be done as we did earlier. So there will be balancing. If the balancing is over here, then it will be taken down to the opposite side. And if in case the balancing is over here or here, then it will be taken to the opposite side. As balance carried down, and here balance brought down. Same over here and here, as we saw before. And that is all for the 3-column cash book. But do remember this important point of discount.